Good morning to all traders and welcome to our daily marketing science video provided to you by Orbex. Stavros here, and today is Monday, 3rd of June. Have a nice month, everybody. President Trump is unhappy with all NATO countries, apparently, looking to take the war into a whole new level, while at the same time, pressure, of course, on China, Mexico, and now, over the weekend, apparently, India and Turkey as well weigh in. Now, where is this heading, Mr. President, and how long are markets going to be impacted for? Well, in the short term, at least, we saw equities last Friday, and also the US index suffering good losses. Let's now have a look what we can expect from the index again, as well as the Dow Jones. Before we go into the charts, let's have a quick look what to expect today on the calendar. We have Euro area PMIs, Germany's, and of course the Euro area will be important. Core speech later, Canadian as well as manufacturing PMI, and most importantly the ISM manufacturing in the US. I would also pay attention to what happens with the employment index on ISM because we are expecting the NFP on Friday. So let's go straight to the charts. I want to start with a rather mixed DXY. Okay, so DXY has moved as expected. We were expecting a move up here in a truncation, and from here we have an impulse to the upside, an ABC with a combination, potential combination, because here we see something like a double top. And since prices now come down here, that could form a flat. Okay, so that would be a zigzag and a flat combination, which means that prices may move all the way up to here to complete wave C. Now, of course, that could turn out to be a triangle or anything else, or the invalidation if prices moved beyond that level. Okay. At the moment, it seems like prices there is some sort of support at this level, but don't forget that we are quite bearish on both MACD histogram and MACD lines. Okay, so that could be simply a correction and then a continuation down, where in the longer term, because we just completed the impulse to the upside, this could be simply the wave A. Then we can expect a retracement back to B and then wave C to even near 97 levels. Okay, so we have some signals here that suggest that the index is a little bit bearish, but despite that, you know, always we can expect a short correction, and of course depending on the pattern that we're going to see. Now if we go a little bit lower, we see a similar pattern, and that is why I just have, you know, also the possibility of moving up here is not as low, okay? And this is because we are here, one second, we are here, we have again an ABC, okay, and this is a zigzag, and this turns out to be a flat, which means that this will be way A, then way B and way C, and from here is where we can look further close, but this is like medium term. In the short term, in case we go and cross above 97.70 and then break 97.90 or 98, then we'll probably look into go and complete a flat pattern over here. Now, whatever the case, wave A, okay, or the first downside move, it's ending around 97.14, the extension of, okay, and this is a very good previous support level as well at the same time. So I'm a little bit cautious on the index, so we have quite a few invalidation points. One will be the 97.70, then second we're looking at this area pretty much, anything below 97.93. If prices break above that level, most likely looking for a flat. If we get invalidation here, of course, we're looking at prices to move at 97.50 and then all the way down to 97. Now, quickly also on the DAX, I want to start with the 4-hour. Things on DAX are a little bit more clear. We've had this move to the upside, ABC, triangle to the upside, then another zigzag. And here we start an impulse. Okay, now that may turn out an ABC, or 1 to 3, but at the end of the day, I don't think it's important to look at this at this moment. What is important to see is that we're most likely going to move lower after completing this impulse to the downside. We broke this level, and we can expect now prices to move lower to anywhere between 23.7, 24.3, most likely have a rejection, a correction and move lower, or of course if this turns out to be an ABC, then we should be looking at prices to move higher from here. Now if prices turned, of course, and move all the way up, that would invalidate the bearish scenario, but this is not likely to be the change, considering also on the fundamental front, on the political front, there is quite some de-risk coming from the US trade war. A little bit lower on the 60-minute time frame on the Dow Jones. We have here this corrective pattern and the triangle, of course. Prices broke above, we had an ABC, but this is also in the medium term is as well an ABC corrective wave. Okay, so whatever formation we want to follow in this chart, they seem to be all corrective patterns, and in the long term we're still looking to be bullish, right? But now where prices are going to head down towards to, it's not really certain, but as we said before, now this is likely to be an invalidation point in the short term, 25, 23 or so, and then of course the 25.96. In case prices keep moving lower, we're looking at hitting the 24.32. Quite a few signals on the MACD and RSI that support this this move. Okay, but normally, just to keep that in mind, since we moved into this, we had this zigzag. Now we are expecting 5 waves to the downside, a correction, 3, and then another move to the downside with 5 impulses again. So we are looking probably to very good chances of moving lower. So this is all for the day. It's Monday, as I said before. We expect a busy week on the trade war front, and also on the fundamental front. We have quite a few interest rate decisions coming on, as well as the NFP on Friday. So thank you for watching and for being here for another day. If you like the video, hit the like button. I would recommend that you keep an eye on our blog. As always, is where we'll cover the latest news, publish certain ideas, and provide all the necessary tools a trader needs.